Now, it's not that often you see this kind of dispute spill into public view, let alone with a sovereign wealth fund. Let's go live to Dubai now, where Bloomberg's Chris Burns is following the local fallout. Chris, tell us what would happen if Citigroup sticks to its guns and doesn't come to some kind of a settlement with Abu Dhabi.
Well, Eric, keep in mind that Abu Dhabi is sitting on 8% of the world's oil, so they don't have a whole lot to worry about in terms of funding. But they also have their hands full with their own billions of dollars in projects, building the Guggenheim and the Louvre and all kinds of billions of dollars in residential projects, plus that bailout they did just this week, $10 billion more for Dubai World to try to keep them afloat. So they do have their hands full, and there could be more bailouts here coming up. So a lot of financial obligations in any case.
Okay, so Abu Dhabi is very liquid, but what's at stake for Citigroup?
Well, for Citigroup, it is important that they get this money. They are trying to repay these TARP funds that they got from the federal government, $20 billion worth. They have said that they do want to issue $20 billion in stock to make up for that. But if Abu Dhabi tries to back out of this deal, it could make things a bit tighter for Citigroup. Eric.
Okay, and very quickly, Chris, how much harder, if any, does this make it for Abu Dhabi to help bailing out Dubai?
Well, they do have a lot of obligations, and it really depends on how many more bailouts are required in Dubai. We're going to see how these talks come out, these restructuring talks between now and the end of April on $22 billion now worth of debt. But there are also perhaps $55 billion worth of debt coming due in the next 3 years here in Dubai. And some of that, analysts believe, will need to be bailouts. So those are the financial obligations up to now. Eric.
All right, that's Chris Burns live in Dubai with the latest on another blow-up, this one between Abu Dhabi and Citigroup.